Hello, Katerina.
Hello, Veljko.
You said you want to talk about Warren Buffett today.
Yes, Warren Buffett announced at his last shareholder meeting, he kind of dropped a big surprise on everybody is that he will be stepping down as a CEO at the end of this year. Not too surprising given his age, but still a bit unexpected, I think, for everybody else. So I wanted to talk about Warren Buffett.
I know I'm not going to make many friends by admitting this, but I've just never been in the cult of Buffett. And don't get me wrong, I just don't get fascinated by personalities easy.
I
Look
do,
up to heroes.
I'm a big personality fan. So
Yeah, I mean,
that's why I wanted to do something.
I'm just not the guy that reads biographies, let me put it that way. But I think it comes from a philosophical view of the world. Some of us believe that history is moved by great people. And
Yes.
then you have the other theory that great people are a product of the circumstances they emerged in. And I think I'm kind of leaning more towards the latter. Napoleon changed the world, but if Napoleon had not been born,
Somebody else.
Joaquin would have done
Somebody
it.
else. Ajak, who plays him. Oh, that's a horrible movie. Anyways, I would love to talk about Warren Buffett's Berkshire Hathaway today and discuss a few things. I wanted to talk a little bit about his four pillars of investing, like the four main investments that he's made. Talk in general about what does Berkshire Hathaway hold in terms of publicly traded firms that everybody's familiar with. Talk about the returns that Berkshire has provided to shareholders, which is why Warren Buffett is so famous. But besides that, I also think that he is famous because he just has such a personality, likable personality in a way. And his shareholder meeting presentations, annual shareholder meeting presentations, have been a guiding discussion for many shareholders and even non shareholders of Berkshire Hathaway who just wanted to see what Warren Buffett is going to say about the economy.
No, I really look forward to it. As I
Yeah.
said, I don't know much, and it sounds like an opportunity for me to learn a lot. And perhaps I can push back against
Yep.
some of the fanboyish things here.
So we always come up with like a fun question. I didn't really come up with one. Let's just throw out a couple of options. What would be a fun question for this Warren Buffett discussion?
Well, I got two that I think permeate my thinking here. First, what makes Warren Buffett special?
Uh-huh.
And
And will there be another Warren Buffett?
that's exactly that's exactly what
Oh, I read your
I
mind.
was. You yeah. You know what they say: great minds think
Ah,
alike.
I see. I
and
see.
and
Good.
fools seldom differ as well. Yeah, what makes Warren Buffett special with a sidebar of can we replicate that? Can we
Yeah,
make another Warren Buffett?
that sounds good.
So let's do this. Welcome to Questions in Finance.
A podcast where we translate academic mumbo jumbo to answer interesting questions in finance. I'm Kate Holland.
And I'm Veljko Fotak. Kate and I met when we were PhD students at the University of Oklahoma.
Today, we're university professors, and we spend our days teaching and researching companies, markets, and all things related. Before we get started, I wanted to point out that there is a video recording of a prequel to this podcast recorded just by me, Kate, on YouTube. To find it, you will go to YouTube and in the search bar type in questions in finance, no spaces, so no spaces. Once you see our main page, you'll click on videos and then select the video about Warren Buffett. I hope you enjoy it as well. Let's get started. First, I would like to mention the four pillars, or what's referred to as Buffett's four most successful investments, and what I guess he credits the growth of his company to.
Maybe you can just give us the 30 seconds of who Warren Buffett is for the one
Yeah.
person that lived under a rock for the last 70 years.
And I'm probably not going to be the best at it, but Warren Buffett is a favorite public investor. He has run Berkshire Hathaway, which I would term as a conglomerate. It's a company that under its umbrella holds a lot of other firms. Currently, about 80% of its holdings are tied up in other companies that Berkshire Hathaway owns. So these are private firms, not publicly traded, private firms in which Berkshire Hathaway has a majority and oftentimes full ownership. And 20% of Berkshire Hathaway is allocated to publicly traded firms. Now, this differs. Back in 1970, we were looking at about 50-50% split. Since 1970, Berkshire Hathaway has tended more towards the private side, which makes them a lot like the private equity firm. And just 20% of it is in public equities. But public equities get a lot of coverage. A lot of people talk about what Warren Buffett invests in. And one way that they know how does Warren Buffett invest in these companies, publicly traded ones, is obviously because Warren Buffett, like all investors that manage at least $100 million, needs to disclose his holdings in these filings called the 13F filings. And so these 13F filings allow everybody to know how Warren Buffett is changing his trading behavior.
I don't know why you're talking about 13 Fs. Like, can we start with, how old this guy is? Where was he born? What did he study? Was he born rich? Was he born poor?
He's very old. He's in his 90s now. He's lived in
Okay.
Omaha, Nebraska. That's where he's been based all of his career, even though he owns companies in all places.
I mean, he's known as the sage of Omaha, right?
Yes, yes.
I don't know much about Warren Buffett, but I do know that he's the sixth richest man in the world by current ranking. His personal net wealth is estimated at about $160 billion. He went to Wharton. I know that he was born privileged. Wasn't his father a congressman? And his father was also a serial business owner. His father owned a brokerage.
Basically, what makes him special is fundamental financial analysis and the reading of 10K statements and understanding good businesses. And that's how he's tried to advertise or market himself. What I like in that story is this detail towards fundamental analysis and understanding of companies' financial statements and really looking at business fundamentals and thinking about business fundamentals.
We can talk about him as an investor.
Yeah.
That's what he's famous for. Although there are at least some narratives about his wealth creation that talk about the other side of the balance sheet. He was very good at generating cheap capital to fund these investments. Right?
I see what you're saying. Cheap capital from returns from Geico, the insurance company. Geico is his big insurance company.
I think it's also important to say for the people who don't know who Warren Buffett is, that he has a certain mystique in his folksy image in a world of finance that's full of people that wear dressy and shiny suits and they love fast cars. Warren Buffett kind of looks like an old professor, English professor, is wearing his tweed jacket.
He's lived a very simple life in a simple house, and he's also been known for getting all of us to think about our haircuts because he's mentioned previously that he thinks twice about paying $10 or $20 for a haircut because he thinks about what if he would instead invest this money? What would this money be in 10, 20, and 30 years? And for him, his career spent 60 years, so even 60 years. And then this $10 becomes, I don't know, 30,000, 50,000. And he decides that that's too much for a haircut. So he has made us all think about day to day purchases and being careful with those because instead we can invest the money and that money can grow for us in retirement.
He was known for being a very disciplined cost cutter in the businesses that he acquired. We will soon talk about his philosophy. But I guess what you're saying is that this investment philosophy, this obsession with cost efficiency in his businesses, it really mapped onto his private life as well. He was a frugal person, or at least he cultivated the image of an
Right.
extremely
Right.
frugal and modest and
Yeah.
non-flashy person. And then overall, just kind of seems like a cheerful old guy that it would be nice to hang out with. Although I do suspect that it's a much more curated persona than he lets on.
Okay, let's talk about the four pillars. Then it's going to take us into a discussion of like his hits and misses overall in terms of trading. So, the four main companies that he credits his success to are number one, Geico, the insurance company. As you've mentioned, this is the company that has generated a lot of money for him that needs to be invested to generate returns to then pay claims if they come up. So, Geico
Sure.
Insurance, we all know the Geico Gecko from the commercials. After Warren Buffett has invested in Geico, it became a private company, so it's no longer publicly traded. So, number one, insurance. Number two, an energy company called Mid American, in which he invested back in 1999. And that company also became private after his investment and has grown considerably in the energy space through multiple acquisitions. I'm going to add another story there later about an energy company called Williams, where I worked. And because of Warren Buffett's interest in the energy sector, because of this Mid American pillar that
Sure.
became a pillar, uh, actually, Williams has an interesting story. It was Warren Buffett in 2002. So we'll come back to that. Number three, BNSF Santa Fe Railroad, which in 2009 became fully owned by Warren Buffett. And again, I think at that time became a private firm, was no longer publicly traded. So all of these are currently private. The fourth pillar is going to be still publicly traded. And you can probably guess what it is.
I mean, if with pillars you talk about these famous investments, I guess you're going to
Yes,
talk about Apple, right?
Apple. That is correct. That's the fourth. That's the fourth one, and that's his one of his most successful investments, I guess.
Yeah, which is a little bit of a paradox because first you haven't spoken about his investment philosophy, but I was thinking back to our previous conversation about his education. I know that he was Bill Graham's student, but at some point you should tell us a little bit about yeah this value investing idea and what stands behind it. Apple is very contrary to how we usually perceive his value investment philosophy. Right? It's the type of company that he even swore he would never invest in Apple.
Initially, but then as Apple has matured and grown, he understood the valuation a lot better. But yeah, his philosophy is mostly he wants companies with very strong cash flow in businesses that he can understand. And what you're talking about, I think, is that initially, especially from 1995 2000, he was quoted saying, "I don't understand these tech businesses." Apple was a
Yes.
tech business, but with time he came to understand the product, appreciate the steady cash flows coming from Apple. So I guess Apple became a company that he was comfortable investing in and that was fitting his philosophy.
See, but again, I don't know a whole lot about Warren Buffett, but from the little that I understand, insurance stands on its own because the insurance play, and we should probably explain this to our listeners. When you have a financial conglomerate and you're buying an insurance company, you're not doing it because the insurance company is generating abnormal profits. You're doing it because the insurance company is generating cheap capital to fund your other investments. The typical insurance
Mhm.
model, the people that are buying insurance or the businesses that are buying insurance from you are paying a premium over time. So you're accumulating money over time.
Yeah.
And then if something happens that triggers a claim, you have to pay it. But that happens at some point of time in the future. In the meantime, you have this money and you can invest it, do something with it. And this is, first of all, one of the pillars of his investment model, right?
Mhm.
Buy an insurance company, generate cheap internal funds to then purchase other businesses. When we talk about Warren Buffett as an investor, a lot of people think of an investor as somebody who goes out and buys shares in companies. And that is what Warren Buffett does, and it isn't because he's the guy that takes over the whole company.
Berkshire Hathaway's take was always acquiring businesses with good owners and letting those owners run the companies and hands off.
I was under the impression that Berkshire Hathaway basically had this team of managers that they would throw into a company and that they would just
No,
cost cut,
no,
cost
no,
cut,
no,
cost
no,
cut,
no.
cost cut. And
They keep the original founder, and the original founder runs the company, and they largely run it pretty much how they've been running it before. If you think about Berkshire Hathaway, what is Berkshire Hathaway? It's a conglomerate that's really built at its base on insurance, energy, railroad, and Apple.
I was under the impression that Berkshire Hathaway was mostly in cash.
Right now, they're holding $333 billion in cash. So that's a large amount of cash. Here is the Wikipedia page. And so it's just a great resource. They do a great job listing his private holdings. The Wikipedia also updates things. This shows you the four pillars that we've discussed. And here we can see some of Warren Buffett's largest publicly traded firm holdings as of right now. And I wanted to mention a few stories behind some of these companies. Let's talk about some of these holdings, and then we will come back to the story of Berkshire Hathaway itself. We've already discussed the holdings of Apple. This was one
Mhm.
of the four pillars. Also, interestingly enough, Warren Buffett holds quite a bit of money in financial industries. He still holds a significant ownership in Bank of America. He also used to be invested in JP Morgan and Wells Fargo, but he divested those positions in 2020, around 2020 to 2022 with the COVID infusions. He also holds a significant stake in American Express, in Visa, and in MasterCard. So all of the card services and Bank of America. Significant holdings in financial firms, significant holdings in oil and gas, Occidental Petroleum and Chevron, also a large part of his position. Coca Cola and Kraft Heinz is going to be in the food category. But Coca Cola goes back to this was one of his earliest investments. He's held this position for 40 years. And interestingly, in 2024, the dividends that Warren Buffett got from Coca Cola was $770 million just in the dividend alone.
I mean, from the little I understand about Warren Buffett's investment philosophy, Coca-Cola fits it a lot better than Apple. Isn't Coca-Cola typical dividend paying stock?
Apple became a dividend paying stock as well a while back. But yeah,
Well,
I
I mean,
can
I
see.
don't know what you mean with that. I mean, if you're meaning they paying dividends, yeah, but I don't know what their dividend yield is. I certainly wouldn't call them attractive, right?
Yeah, I mean, he was looking at the share appreciation. By the way, Berkshire Hathaway themselves does not pay a dividend. They reinvest all of the money back into a company. So
No,
while
that's
they
interesting.
appreciate the dividend paying stocks like Coca-Cola, they themselves choose to reinvest the money back. And of course, they do that in their private subsidiaries as well. I just wanted to give an overview of the large publicly traded firms in Warren Buffett's portfolio. And again, I guess if I were to split these into groups, we have tech here. We have financial services with Bank of America, American Express, Visa, and MasterCard. Also, Chubb, we can throw in the same category here. And Moody's, I guess, these are all financial companies. We have energy, consistent with some of his private holdings with Occidental Petroleum and Chevron. He's really had a long-term relationship with Vicky Holub, the CEO of Occidental, and has supported her through multiple acquisitions that have been deemed questionable, actually, by several other shareholders, large shareholders of the firm. And there's Coca-Cola and Kraft Heinz, with Coca-Cola being a holding for 40 years in Buffett's portfolio. And he's a known big fan of Coca-Cola as well. Also, another thing I'd like to point out is that while he has Warren Buffett and Berkshire Hathaway has really outperformed S&P 500 over the last 25 years, and really over the lifetime of Berkshire Hathaway going back to 1965, it's not true for every single year. There have been 11 years in the history of Berkshire Hathaway when the company has underperformed the S&P 500 index. And again, the biggest period of underperformance in combined years has been 95 through 99. Berkshire Hathaway today employs 392,000 people. So quite a few. And again, like where does it employ them? Remember that Berkshire Hathaway owns a lot of companies. If we go back to our list of firms that Berkshire Hathaway owns that are private firms, the employment in all of these companies, we see Seas Candy, we see the gas stations, some energy firms, NetJets, by the way, close to Veljko's heart. Is
Yeah,
that right? Is that the one you have the
yeah,
job offer from?
yeah. I did before it was bought out by Warren Buffett.
I see. I see. Geico. So the people who work in all of these companies count towards the 392,000 employees of Berkshire Hathaway. I just wanted to mention some of these holdings. Again, it goes back, at least in Warren Buffett's words, to four pillars for him, which is insurance, Geico, energy, Mid American, railroads, BNSF Santa Fe, and his investment in Apple. One interesting thing, I guess, we can look in the last 3 years just to see how the product mix of companies helps Warren Buffett offset some of the changes that occur in the markets. Whenever the market doesn't do too well, he still has the private companies. And these are lifestyle businesses. The railroad is still going to bring in money to him. It might be less than it was in the year of the boom when we are in the recession, but he's holding the whole company privately. So he's not looking at the fluctuations in its stock price. He's looking at the actual earnings because all of the earnings belong to him. So let's talk about some hits and misses for Warren Buffett. And these are not like all, these are just some that have been mentioned, and I wanted to highlight them. We are going to talk about companies, I guess, in which when he invested was in them were still publicly traded. And I'm going to highlight as his hits Coca-Cola. We already talked about it.
All
He's
right.
been very, very happy with that investment. And BYD is another one that he has been quite happy with as well. And that's been only recently made in 2008. And Charlie Munger, who is his friend and partner in business, who unfortunately passed away also recently, has highlighted this company. It's a Chinese company that makes batteries and electric cars to Warren Buffett. He invested $230 million for a 10% ownership stake in 2008. And 2 years later, this 230 million was worth $2 billion, an excellent return on investment. And they started trimming their stake in BYD sometime around 2020, 2022, slightly reducing it. Another hit, I guess all of his four pillars are hits: Geico, Mid American, BNSF Santa Fe, and Apple. But here I'm just going to mention Mid American. He purchased 75% stake in this utility company back in 1999. And that's what got him interested in the energy business. And the operating cash flow growth for this company from 2000 to 2004 went from $122 million to $4 billion. So pretty significant growth for this energy sector. A lot of this growth came about from additionally acquired energy assets.
You were telling us about the success stories of the good people at Berkshire Hathaway. We have Warren Buffett with his faithful sidekick Charlie Munger, and
Yeah, yeah.
they went on their big successful acquisitions. Ultimately, when you're looking at this performance over time, you're beating the S&P by a couple of percentage points on an average every year. And in the world of stonks going to the moon, that doesn't sound like fantastic performance compared to the thousands. And yet, the magic of a couple of percentage points every year, year after year, very stable. You're buying very safe, stable companies.
Very stable. I mean, Coca-Cola, once a person starts drinking it, they pretty much cannot drop it for life. So, very steady stream of income. BYD, electric cars, which are going to be sold pretty much everywhere in the world, and people are going to just need more of them.
Except for the United
Except for the
States.
United States, yeah. But and energy, those are very stable businesses.
I think that there is a philosophy that gets revealed when you start connecting the dots. So one big tip is beat the market by a couple of percentage points and live for a very long time.
In businesses that are cash flow generating,
Sure.
steady businesses,
But
right?
yeah, but what I'm trying to say is that some of this massive wealth creation is it's a modest wealth creation on a yearly basis compounded over a very long amount of time.
Right. Yeah, no, you're highlighting an important point.
And at that point, it's also important to have faithful shareholders
Right.
that don't pull out when you're having a bad year.
Like 95 through 99, that period of time of underperformance.
Correct. I mean that would have been enough to sink anybody.
But you have to remember that Warren Buffett and Berkshire Hathaway do not draw any money from their shareholders after they've sold the initial shares. They have not had any cash coming in from shareholders. They only have cash coming in as cash flow from their holdings, their private firms, and whatever the payouts they get from their publicly traded ownership. Berkshire Hathaway A shares trade at a very expensive valuation. They have not too long ago split away Berkshire B type shares, which is the same share, but just at a lower valuation to allow some smaller investors to get in. Berkshire is not getting money from shareholders. Shareholders
Well, yeah,
pretty
makes
much
sense.
looking at it as a way to earn returns for themselves.
And I never really thought about that, but if you're generating capital through your insurance business for your investment purposes, then you also don't have to have season equity offerings, right?
Right. And there has been no dividend payouts. It's all just been capital appreciation, capital gains.
Wow. Yeah, that's fantastic. I think that in 2025, everybody knows that the secret to a successful financial conglomerate is either buy a bank or an insurance company and generate cheap capital, right?
You're giving me a great opening because one of the misses is an airline. So buy an insurance company or bank will be a great investment, but do not buy an airline because apparently that's a horrible investment. And Richard Branson, who owns Virgin Atlantic Airlines, was once asked, "How do you become a millionaire?" And he said, "Well, that's very simple. You should be a billionaire. Then you buy an airline company and you become a millionaire."
I've heard that.
But Warren Buffett
It
wanted
is a
to
funny one.
test that actually. And so he did purchase
It
shares
has-
in US Airways.
and he was probably already a billionaire by the time he did it. So he was really testing it.
He invested in 1989 $358 million in US Air to get about close to 10% ownership in the preferred stock. Then he lost, I guess, a large part of that investment because what he underestimated largely was the advice from Richard Branson and that deregulation in the airline industry in the early 90s had just extremely unpredictable influences on a variety of airlines. So, US Air from 1990, a year after his investment, to 1994, continued to post losses. And eventually, the company was acquired by American Airlines, actually merged with US Airways, and then it's now part of American Airlines. That's one of the misses for Warren Buffett is US Air. So investing in airlines is difficult and you could become a
Sure.
millionaire by doing that if you were a billionaire before, and especially difficult in the early 90s. And why this was such a big miss for him was figuring out how does the deregulation of the airline industry influence all of its players.
It's interesting. We, of course, like the meat of the man for many reasons, mostly deserved. And yet, he does like to play this political place in some sense. I'm thinking of he very famously came to the rescue of the US automotive sector 2007 2009, right? And especially I think he had a big stake in GM at the time. And I remember hearing some of the details. I mean, first he bought preferred shares in the
Right.
company, right? And when Warren Buffett buys preferred shares in a company, Warren Buffett gets preferred shares that Kate or Veljko do not get. So
Of course.
he was getting preferred shares, and if I remember correctly, they were paying something like 7 or 7.5%
Yeah.
dividend in a year, plus whatever capital appreciation, of
So,
course.
I mean, for sure, his investments, I'm not sure if I would say have a political angle to them, but I would say they always have a profit angle to them. And I think this investment in a car company, he was really coming at it from, okay, I can make money by giving a capital infusion to this car firm, car manufacturer.
Fair enough, Kate. I'm not begrudging anybody a profit motive. If you're playing politics to make a profit, that's fair game too, in some sense. But to understand the investment model, I think that one of his reasons for investing in GM was the expectation of a bailout to be
Mhm.
coming. And not only that, but as soon as he was done investing in GM, first, he's notoriously secluded and secretive. He doesn't give a lot of interviews. But when he buys a company, you generally hear it, right?
Mhm.
So
Mhm.
he invests in GM and then he goes into every big talk show and every financial show on TV, radio, media, talking about how great of a company this is. So now people are running out and buying shares in GM. And what are you buying? Well, you're not buying preferred shares at 7%,
Right. You're buying
right?
common
I mean,
stock. Yeah.
you're buying common stock with a historical dividend yield, probably somewhere between 2 or 3%. I'm going off memory here. I might not be exact with the numbers, but you're not getting the deal that he's getting. And then, famously, a couple of months later, he actually went to Congress to testify about how the US automotive sector needs a bailout, right? And then we got the Buffett bill.
All true, but the big question is where would GM be without Warren Buffett? And my counter story to that comes from an energy
Yes.
industry, and it's a company that I actually worked for at the time when this deal happened. So we're going to talk about Williams Energy. Back in 2002, Williams Energy had a very simple business. There was really like a pipeline company taking natural gas from one location to another. They also had an added trading floor operation to that, and this, at the time, novel fiber optics business, which actually was part of the issues that
Sure.
created problems for Williams. But the biggest problem for this good business, everything Warren Buffett's looking for, a cash flow, very steady type business, was that Enron went down around the time due to the accounting scandal back in 2000, and the whole energy industry, Williams, Dynenergy, all of the companies in that space were extremely tainted by Enron's demise. And a lot of positions were unwound because they were done with Enron as a counterparty and came back on the books of all of those other firms. Well, anyways, Williams all of a sudden found itself in a place where a big part of their debt was coming due and they could
Mhm.
not make a payment. They could not. They reached out to their bankers, and the bankers knew that Williams is in trouble. And guess what the bankers told Williams?
Well, given the story, I guess the bankers told him to take a hike.
That's right. They said, no, we're not willing to extend extra credit to you or restructure your
Sure.
current loans. So the banks were kind of banking, banks were banking on Williams going bankrupt and then taking a claim to Williams assets
The
and
banks were banking on a
bank,
bankruptcy.
yes, that's right. And then in bankruptcy they would get a hold of Williams assets, get to
Sure.
sell them, and so on. So in 2002, Williams was looking for a savior, and there was nobody coming to the plate. So I was working there at the time. I thought, all right, it's really a bad position because all of the Enron people are traders who are looking for jobs. Here in the next week, I will be
Mhm.
another trader from Williams looking for a job, given that there's a lot of Enron
Sure.
traders already out there. But last moment, Warren Buffett infused $900 million into Williams. Nobody else was willing to do it. I am giving this a very positive spin. This is related to Warren Buffett's interest in the energy industry in general and his participation in Mid American, because remember, he made that investment in 1999, so just a few years prior to helping Williams. This $900 million was an amazing life saving deal for Williams at the time, but it was an amazing investment for Warren Buffett. Why? Because he ended up netting close to a 35% return on this investment
Um,
while this investment was collateralized with a pipeline worth $2.7 billion, so 3 times the value of the loans that he gave to Williams. And this was a pipeline from Texas to New York, so a foolproof asset, so to say. So he gave $900 million. Williams did take the money, did survive in a year, paid everything off, and refinanced the loan at a better rate than 35%. But Williams ended up giving him $300 million. Great return for Buffett with an investment that nothing could go wrong given this collateral, but also an amazing deal for Williams because otherwise they would go bankrupt because nobody else was coming to the table.
Well, I mean, clearly size matters. In some sense, there aren't many people who have the scale or
Right.
many financial institutions. I mean, in some sense, this is a very unique proposition. You have some financial institutions who have that kind of liquidity, but they're big, bureaucratic, or they manage money on behalf of others. So they're limited in their ability to pivot. On the other side, you might have other younger, more risk taking funds, but they're younger and they're small and that they can come up with that kind of
With the
scale.
money. Yeah.
Nevertheless, clearly something unique here that allows him to capture value when others
Yeah.
cannot take advantage of it.
Yeah. Yeah.
And yet I think that one thing that I'm taking away from this that I guess I wasn't necessarily expecting coming into the conversation, but is that I think we have a simplistic view of the Buffett model. I think we all tell overly simplified stories.
Well, I think it's pretty simple if you give somebody $900 million and in a year you get 300 million from that without any risk. That's a pretty simplistic way to make money.
No, but we all knew of Warren Buffett as the value investor, and we all have this idea that he's going to go for some sort of dividend capture, stable cash flow company type, right? That he can understand. We know that he cares about cost
Mhm.
and that kind of efficiency. We know that his philosophy is one based on people, good managers,
Mhm.
and but now you are showing me a side of him through both of these examples of Warren Buffett as the buyer of distressed assets, right? As the rescuer of distressed
Well,
companies.
it goes to his base philosophy of looking at undervalued businesses. And obviously, a distressed asset, if you can find a good one, is an undervalued business if it recovers.
Yeah, but you see how this is a much more eclectic story. Coca-Cola is what I'm expecting to be
Right.
the prototypical Buffett investment,
Uh
right?
huh.
And now we just spoke of, well, his biggest holding is in Apple,
Right.
something that doesn't fit that mold in many ways, or maybe you were arguing maybe it does a little bit more
Some
today.
other recent things that maybe don't quite fit the mold are also his investments or more recent investments in Japanese companies,
Okay.
Mitsubishi, Mitsui, and so on, which are a lot like Berkshire Hathaway. They're actually conglomerates that hold a variety of businesses under the umbrella. The most known ones would be cars in their case. And Warren Buffett was just attracted by their very low valuations. So that's another underappreciated asset angle there.
And I understand that to some extent, when you have the size of Berkshire Hathaway, you have to park your money somewhere.
Yes. Unless you park it in cash, as they're doing right now, right? They have $333 billion sitting in cash.
And how do you interpret that? Is that just a huge amount of pessimism about the state
He
of the US
thinks
economy?
that everything's overvalued. Basically, he's not seeing any opportunities that he looks for that would be diamonds in the rough, so to say, or something that will give him a lot of appreciation. He has not commented a lot on the cash holdings. He has mentioned to the market to not worry about it, that they're earning some interest on it, that they're preparing for the next big opportunity to come along. That's why they're holding so much in cash. But he has not mentioned anything. One thing that he's said is that he believes in the US economy. He always has. And he thinks that in the long term, it's a great investment. So that's how he framed it. But he did not, unlike he usually does, he has not done a lot explaining that a cash pile and has really try to stay away from the topic. So one can make conclusions on his actions, but he is not commenting on it.
But to be clear, this has nothing to do with the current market turmoil. I mean, my understanding is that uh, the proportion of cash in their investment portfolio has been steadily increasing over the last 5 years.
Yes.
This is not trade tariff.
They really had a big switch to cash at the end of 2023, beginning of 2024. From right before COVID
Okay,
to through COVID, so 2019 onwards, they stayed at about 100 billion in cash. That's their, I guess, more or less norm over the last 5 years.
sure.
But from the end of 2023, beginning of 2024, they have just almost exponentially started increasing their cash. A big part of that came from their sales related to Apple. They have unloaded a lot of Apple shares in 2024 and 2025. And that's where a lot of it came from.
So Warren Buffett is gun ho the US economy, but staying a lot in cash and building a stake in BYD, a Chinese car manufacturer.
Don't forget the Japanese conglomerates as well. Still, the shares in BYD and the shares in the Japanese conglomerates don't come close. His largest involvement is again with US private firms and, still $75 billion in Apple, still $45 billion in American Express, close to $30 billion in Bank of America, and $25 billion in Coca-Cola. What we are talking about here with BYD and Japanese firms, they're like pennies on the dollar.
Anybody who preaches Ben Graham, value investing, don't buy that which you cannot understand, should not be buying stakes in a Chinese EV manufacturer. I mean, that's talk about a black box. And don't get me wrong, I'm a big fan of BYD, and I think it's a company that, especially if you
Mhm.
compare it to Tesla, is greatly undervalued. And yet, if you believe in transparency, if you believe in good accounting,
Well, let's think about it from Warren Buffett's perspective. The company has a lot of potential. It has a very easy for him to understand model, make batteries in electric cars, sell them, cash flow comes in, and he's putting in $230 million for a 10% ownership stake. Remember, $230 million in 2008
fair
is
enough.
significantly less than what he got in Williams in interest alone, not counting the $900 million loans that he gave them. In 2003, he got back $300 million from Williams in interest plus the $900 million back
So
that he loaned them. So it's $230 million for Warren Buffett in 2008. That's again like he can probably gamble that away and not feel it.
that's the spare change he found under the mat
Yeah.
when
Which
vacuuming
is,
his car,
yeah,
right?
it's
Which he
just
probably
became,
vacuums himself because that's Warren Buffett.
and in 2 years it became a 10x return. So not bad.
Fair enough. So, okay, those are some really fascinating
Yeah.
anecdotes.
I got one more.
All right.
I want to talk about the misses. We already mentioned one miss,
So one of the misses was US Airways.
the US Airways. What is the problem with that? It's very hard to mess with deregulation, and understanding the effects of deregulation, tough for all investors, including Warren Buffett. So that's, I guess, the lesson learned there.
So is that like saying politics are harder to forecast than economics, or just because you know how to read a balance sheet doesn't mean you know how to forecast an election?
Well, not so much an election. I guess we're talking here specifically about
Sure.
early 90s, the airline industry deregulation.
And,
Yes,
and it's interesting because you mentioned also NetJets,
right.
but I think that came a lot later on.
Well, I can tell you exactly when it came and how much he paid for it. He bought it in 1998, so not much later, and he paid $725 million. And then he had 100% ownership in the company.
When he purchased the company, anybody who was there, most of the people who were employed there had some degree of share ownership. They had a generous share ownership compensation plan, partially because they were struggling to generate cash.
I
And
see.
so to pay people, they were giving them shares. And when Warren Buffett came in and bought the company, literally janitors and secretaries started showing up with Porsches and Lamborghinis, and it was a merry time for everybody.
95 through 1999 tech boom fell under that same story. Okay, back to Warren Buffett's misses. I'm gonna just briefly mention this one, Solomon. So Solomon, I actually had a internship in Solomon Smith Barney as part of my MBA summer internship. I'm a bit familiar with them. Berkshire bought preferred shares in Salomon Brothers in 1987, back when it was still one of Wall Street's biggest firms.
Mhm.
And then what followed was a 1991 scandal, a banking scandal. So the traders in Salomon Brothers were accused of rigging treasury note
Sure.
auctions. That was a big problem. Eventually made this a bad investment. So I guess what Buffett learned from that is that he never wants to deal with a scandal that doesn't stop, that keeps going on. So in his words, he said, I'm going to just read here just a second.
Mhm.
I can handle bad news, but I don't like to deal with it after it has festered for a while. And that scandal has festered for a while. He's actually said that Salomon was reluctant to immediately face up to the bad news, which has created the eventual demise of the company. Salomon never recovered, and in 97 it sold itself to Travelers Group, and then eventually Citigroup, that was the umbrella on the Salomon Brothers. So Buffett actually had to come in and step in as a chairman to clean up the mess. So he participated in the company very closely, but this has turned him away from a bank that has a scandal that doesn't get resolved quickly. So I guess another lesson there from that miss, if you see a scandal that doesn't settle in a short period of time, just get out.
This is also interesting because, to go back to the previous theme of, this is a more complicated man and a more complicated story than many make it out to be. The usual narrative is they bet on the right people and then
Hmm.
they let them do their thing. So a hands
Hmm.
off investment approach. And yet, here you're describing a situation where things were not going the right way.
Hmm.
They must have realized we didn't bet on the right horse, and they were ready to actively step in. So you have the passive investing, but you're monitoring, you're not letting it
Yeah.
go too far. And you clearly have the ability and the capability of stepping in if need be. And you have the distress investments. And perhaps this is what it takes to be. You can't be the greatest investor of all times, or at least the most famous one, and be a one trick pony.
Gotta keep reinventing yourself.
Correct. Perhaps there are some core principles here. Don't buy what you don't understand.
Don't buy something that's in a scandal that doesn't get resolved immediately and that the company doesn't face up to.
Yes. Focus on cash flows.
Don't buy firms and industries that's going through a very rapid period of deregulation because it's very hard to predict anything.
And see, and yet here it does feel to me like, again, I haven't followed his history close enough to make a definitive statement. But it does seem to me like Berkshire Hathaway does play on political bills. They were following the airline industry through a deregulation phase, or trying to. I think that they made
Yeah.
plays in the energy industry also around the time when there were big regulatory.
Deregulations. Yeah, so you're right. They were trying to guess the right industries. It's just that the airline was one of their misses. Yes.
Fair enough.
Banking too was Solomon, but just from a different perspective. It was just a scandal. The biggest miss, according to Warren Buffett, is Berkshire Hathaway.
Okay, fair enough. The
So Berkshire
textile.
The textile manufacturer, yeah. So now we know Berkshire Hathaway is a holding company, but actually, this is considered by Warren Buffett. Let me see, in his words, it's he showed some childish behavior in this investment. And so let me tell you the story. So in 1962, Warren Buffett started buying shares, so bought shares in this company called Berkshire Hathaway, which was a textile manufacturer in New England. And at the
Mhm.
time, textile manufacturing was starting to fold in New England because they were faced with foreign competition. This is back in the 1960s already.
Sure.
So actually, this was a family-run company with Seabury Stanton running it and holding a significant amount of shares, and his brother also holding a significant amount of shares. Except for the brothers didn't get along. So Seabury Stanton's brother sold his shares to Buffett for $7.50 a share. Therefore, Buffett became a major shareholder in this struggling textile manufacturer. 2 years later, 1962, Seabury Stanton, the CEO of this textile manufacturer, Berkshire Hathaway, approached Buffett and said that he is looking to buy the company out. And he made a verbal offer to Buffett of $11.50 a share. So he's already profiting from $7.50 to $11.50 a share.
Hmm.
Yet, whenever the actual official offer, the written document arrived, offer in the document was $11.37.5. So just slightly less than $11.50. That slightly lower price made Buffett really angry and he did
Okay.
not tender his shares. He did not tender the shares and instead he did something that like as he said, showed some childish behavior here. He ended up buying more shares at a higher price in a struggling textile manufacturer, an industry he knew nothing about, in order to fire Seabury Stanton because he didn't like what Seabury did with this lower offer.
Oh, I see. Okay, that's a really fascinating story.
But then in 1965, Seabury and his son, who was a treasurer, stepped down after Buffett has accumulated a large stake, and all of a sudden, Buffett had on his hands this pretty much dying textile manufacturer that he knew nothing about the business, that he paid up for, and he considers that to be one of his biggest misses. Of course, he has closed the textile manufacturing, and then he used Berkshire Hathaway as a shell, as his holding company for everything else. And it's a very different Berkshire Hathaway because it's a holding company for his businesses than the initial textile manufacturer.
No, that's a fascinating story, especially because I mean, I knew that Berkshire was a textile manufacturer, but I was somehow under the impression that they had bought it because they wanted to use it basically as a financial shell.
No.
I didn't realize that this was an actual business that he intended to actively run or co-run initially.
So in his own words, so this is Warren Buffett talking about himself and Seabury Stanton, who was the CEO of Warren Buffett. Through Seabury's and my childish behavior, after all, what was an eighth of a point to either of us? He's talking about the difference in the price.
Sure.
He lost his job because he forcefully left in a way. And I found myself with more than 25% capital invested in a terrible business about which I knew very little.
I guess there is a strong lesson here about the importance of rational investing rather than passionate
Yeah.
investing. And the fact that he's calling himself out like this is to his credit, and also reveals another big important characteristic of any successful investor: ability to step back and dispassionately analyze yourself.
And talk about your misses and why they happened.
On
Right.
on the other side, when it comes to the actual anecdote, I don't know. I mean, there is at least some value in establishing a certain reputation of somebody who doesn't get taken advantage of in business dealings. I've actually listened to a couple of journalists that interviewed him repeatedly, and they describe him as being, well, the one thing that always seems to come out is his
Okay,
energy.
let me try to guess. Journalist description of Buffett. Number one point. Wow, that's tough. I want to say shrewd investor, but that's probably not very descriptive. Value investor, another one is probably not very good either. Attentive to detail.
No, but I'm talking more about how they describe him in interviews. I've met Warren Buffett. I sit down for an interview. It is the impression I got out of him.
Heartwarming, easy to talk to. I would think along those lines.
Yeah, and I think that sentiment wise, it sounds about right. And yet, the two things that I heard most often were one, that he has a huge amount of energy.
I would not have thought that. Interesting.
And I've heard multiple journalists say
Okay.
that, especially recently with him not being so young anymore, they would schedule interviews and try to get questions out very quickly, thinking, they have half an hour or 45 minutes. And then 4 hours later, they're sitting there, they're out of questions, and he's asking, anything else? Do you want to talk about anything else?
Well, and his shareholder meetings, he's always very precise. He does a 5-minute warning before it ends and then does closing remarks.
I know that. And the other thing that I've heard being said multiple times by journalists that have interviewed him is that he has an ability to pilot. I've heard the word pilot, I've heard the word domineer the
Mhm.
conversation, but I've also heard people praise his ability to do it in a very elegant.
I see. Interesting.
I guess the comment being that you don't realize how he's smoothly controlling and holding the room and the conversation.
This is interesting. We started out with a question of what makes Warren Buffett special? Can there be another Warren Buffett? I guess maybe all of these things kind of fit into that story. We've described him as an investor, but this describes his personal side. After our discussion is done, if you are asked what makes Warren Buffett special, what would be the 3 or 5 things that you would mention?
You can't turn this on to me. If anything, I'm asking you this because you're the Buffett fan here. But the one thing that really did strike me about Warren Buffett, and it goes back to this, we were talking about this folksy image,
Mhm.
but the one thing that did strike me about him is that he seems to always talk about companies using very simple and uncomplicated language. We want good businesses that are controlling costs.
Good founders of businesses.
Yeah. The one thing that strikes me about Warren Buffett is that every time he's talking about companies, this is not the complicated mambo jumbo of the hedge fund managers talking about an alphabet soup of ratios and whatnot.
No, I mean, he does talk about ratios and financial analysis.
Okay, fair enough. So maybe I'm
But
wrong.
in common interviews, the things that go into the press, of course, he brings it down. Perhaps he translates the mumbo jumbo for an average person to understand, which we aim to do in our podcast in a way.
Maybe this reinforces, though, the impression that I had that this folksy image is a bit of an image, that there is a sophisticated mind behind there that understands numbers, that understands balance
For
sheets.
sure. He's been known to have almost an extremely accurate memory, close to photographic memory. And given that over his lifetime, he's probably looked at, I don't know, 70 to 100,000 10K reports and remembers a variety of patterns, you can think of him as a chess player who has these chess plays memorized. A lot of patterns come to him given his good memory. That's in addition to him being a very sophisticated investor who is able to then translate what he's doing to an everyday person who perhaps doesn't understand things in depth as he does.
So let me then more explicitly turn this question back to you. Can you name a couple of things that make Warren Buffett special, unique,
Yeah.
and a lot richer than me?
It is tough. I think there's several things. It's really his down to earth personality and I guess his willingness to live a simple life in Omaha, Nebraska, combined with his true love
Okay.
for understanding of companies, financial research. Like he enjoys reading 10K reports and he's admitted to it multiple times. And he's done it throughout his life from the very beginning. Building a company that has allowed many people to retire without scandals. What comes to mind is Bernie Madoff was another very
Sure.
positive character for a long time until his late age, until it was revealed that it's all a big financial scam. With Warren Buffett, we have all of the positive attributes without the negative attribute. I think it's his humility, also his ability to face up to his mistakes and talk about his mistakes, to
Sure.
live a simple life while being the sixth richest person in the world. And to be happy with simple things and to be happy talking to everyday people and explaining things to them in a uniting language. He is not a divisive person. He is really a person who tries to unite everything, including his shareholder meeting, which he's made into a huge event that brings about a lot of fans, but also people who want to listen to his advice. So I think there's this uniting scheme, simplicity, yet sophistication and preference for thorough analysis of fundamentals. Those things make it difficult to replicate successful investor.
Because ultimately, the one thing that really stands out to me is the passion that you claim about reading 10Ks.
That, and I think also anytime that we gain power as he has or gain financial strength, a lot of the times it changes the person. The person starts thinking
I
of
see.
them at a much higher level, wanting to be a dictator, thinking that they're better than others. This did not happen to Warren Buffett. So I think that's another very difficult thing to replicate, especially as a person gains and gains power and financial power.
So you think that that humbleness, in some sense, because again, I understand the folksy appeal, and I think that a lot of these characteristics they work on one side of the balance sheet. I get it how people like you, they lend you money at low interest rates, or your investors trust you, and then you automatically get slightly longer investment horizons that makes everything a bit easier. And yet, it's still not exactly clear to me how being a nice old guy makes you a good speaker of companies.
Well, that goes back to his spending hours and hours on end looking at 10Ks, looking for patterns in 10Ks, really understanding the business of the company down to the smallest details.
Fair enough. So it does go back to the good old principles of value investing. He always credited Ben Graham. I'm not super familiar with their biography, but I believe that Benjamin Graham, and Warren Buffett started a venture together early on. So
Yes,
this was
yes,
not just a student
yes.
professor relationship, it went deeper than that.
So to summarize, I guess it's humble plus very thorough financial analysis back to fundamentals, plus allowing others to participate in your game without scamming them.
Awesome. The world is full of Warren Buffett investment quotes and investment advice. Do you have any favorite Warren Buffett investment advice?
I have a quote that I really like, but it deals with companies purchasing other companies. I wasn't ready for this. Do you have a favorite Warren Buffett quote?
Yes, I have a couple. The problem, you never know which ones are really Warren Buffett. I mean, you always have a problem with the origin of some of these. But
Hmm.
I know that it's often quoted as saying, a simple rule dictates my investing: be fearful when others are greedy, and be greedy when others are fearful.
That's a good one.
I've heard that one attributed to him many times. I've also heard him saying, price is what you pay, value is what you get.
Another good one.
And then I think out of all of them, my favorite one, because I think it speaks a little bit more to his big investment philosophy, is it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
And that's the influence of Charlie Munger on him because initially he was very much of an opinion that you really need to always find the best deal possible and looked for those companies. And then Charlie told him, look, even if you find the company that's reasonably priced, but it's an amazing business, that's a good buy. So I think that's coming from their partnership together.
Well, I don't even know if that's a quote or more of an investment rule, but never buy a business you do not understand.
Okay, yeah, that's simple. So the ones that I'm gonna mention is longer than all four of your quotes. Everybody brace yourselves.
Wow, okay.
It's a bit convoluted with a ton of analogies, which I think is another reason why I like Buffett because I love analogies. So, what he's talking about here is about a company, an acquiring firm, purchasing another firm, a target firm. And usually, when this is an acquisition, happens, what acquiring firms look for, are what we call synergies, meaning that together, the acquiring and the target firm are going to have better revenues, bigger revenues, and lower costs. And they can only achieve those revenue enhancements and cost reductions together. That is a synergy. That's what he's talking about. Let me read the quote. Many managers were apparently overexposed in childhood years to the story in which the imprisoned handsome prince is released from the toad's body by a kiss from the beautiful princess. Okay, we've all, of course, read the story.
Or some variations of, right?
So, right, across different cultures. Consequently, they, meaning the managers, are certain that their managerial kiss will do wonders for the profits of the target company. We have observed many kisses, but very few miracles. Nevertheless, many managerial princesses remain confident about the potency of their kisses, even after their corporate backyards are knee deep in unresponsive toads. Anytime I read that quote, I just imagine a huge yard with a ton of toads in it. And so I love that quote. That's one of my favorites.
Ultimately, you've also chosen a quote that really digs into some of his investment philosophy.
Right.
I mean, he's saying, let's not be guilty of hubris and assuming that we can just replace current management and do better.
He's pointing out that companies that acquire a lot of target firms without a good return on their investments, there's many such companies, but the CEOs, these acquiring firm CEOs, are not humble enough to recognize that what they're doing isn't working. They need to change course.
But to connect the dots for our listeners or those of our listeners who are not necessarily as steeped in financial markets, there is a segment of the private equity market that does exactly what Buffett is saying I won't do here. That looks for companies with bad managers
Yes,
whose assets are undervalued because the managers are bad,
yes.
buys that kind of company through what we would generally call a leverage buyout, replaces managers, and then lists the company. And hopefully, now you have achieved higher valuation. And Warren Buffett, he's criticizing a very specific and not a small model or segment of the financial industry.
He hasn't chosen to discipline these types of CEOs. He instead has chosen to invest his money more with CEOs who run their business well and help them be like a support system for them instead of finding these businesses that have overconfident CEOs and then just firing them, as you said, a lot of private equity firms have done.
Yeah, I mean, it's interesting. I never really thought about this in terms of different strategies in a private equity fund. The conservative strategy is buy good firms, get a couple of percentage points of abnormal return every year. Hopefully, if you have a stable enough business behind it, lever it up,
Right.
compound it over a large number of years.
Or several years, probably around 5 to 10 years.
Well, I was more thinking of the value creation of Berkshire Hathaway that we're at what, 5, 6 decades.
60 years. He's been running it for 60 years.
Wow. Wow. And that's very different from the LBO model where you're buying a firm, you're firing managers, you're
Yeah.
throwing in your own people, you're turning it around, and you're hoping within 6 months to have walked away with hopefully a much more significant percentage profit in the short run. You're not looking at single digits.
Different approaches, different
It's,
approaches.
it's a very different buyout model at the end of the day.
Right.
That's
I guess let's summarize. We talked about a lot of different aspects today. Our questions that we asked, what makes Warren Buffett special, but we went about it in a roundabout way. First, we talked about the four pillars, his four big investments, which end up being Geico Insurance, Mid American Energy, BNSF Railroads, and Apple, the only publicly traded firms.
Mhm.
We also talked a bit about his current breakdown, the 2024 breakdown of publicly traded firm holdings, with Apple still being his largest holdings there. But we talked about how there's financial firms, including Bank of America, American Express, Visa, MasterCard, Chubb, etc. And there's Coca-Cola,
Sure.
40 years, holding it for 40 years, and some energy companies, Occidental and Chevron. We have talked about Warren Buffett's performance has been great over time, but what's helped him has also been the long time that he has been running his business, 60 years. He hasn't always outperformed the market, especially 95 through 99 was a period of underperformance. He underperformed the market by close to 6% at the time. And the importance of having investors that continue to believe in him. And then we just used some anecdotes and talked about his hits and his missus. So with hits, we talked about Coca-Cola, BYD, and Mid-American Energy. The story of also Williams came in the energy umbrella, and GM was altogether deregulation part
Sure.
discussion. And then for the misses, we talked about US Air, deregulation, hard to predict, Salomon Bank that went through a banking scandal, and Berkshire Hathaway itself, where Warren called his behavior childish, ended up with Berkshire Hathaway, a textile business that he knew very little about. And then we circled back to talk about what is it that makes Warren Buffett so special and whether that can be replicated.
You did a great job summarizing it, and I think you did a great job today in this episode in the subject matter where I'm a little bit more ignorant. I've learned a lot, and there were some things here I didn't expect. I think that the biggest one, the biggest overarching lesson that I'm walking away with is this. We always talk about how fundamental diversification is to the principle of investments, right?
Mhm.
And yet here you have somebody who embodies this idea. You can't
Right,
pigeonhole Berkshire Hathaway or Warren Buffett's investment empire into a single industry. It spans industries. You
right.
can't pigeonhole it into a single model. It's reductive to describe it as a passive
Yeah.
leverage buyout.
And it reinvented itself over time too. Back to what you're
Correct.
saying, so hard to pinpoint.
And his famous aversion to tech, perhaps driven by his inability or self-admitted inability, right? He was saying, I don't want to invest in tech because I cannot understand the
Right.
valuations. And for him to, at a late stage of his career, come in and have the largest stake of Berkshire Hathaway being Apple.
Largest publicly traded stake on the publicly traded side.
No, fair enough. You can look at it in a dark side and question the investment principles we abandoning.
The humble nature shows through that.
It really does. And I think that you call it humble nature. Is that willingness to question yourself. We didn't talk about it much, partially because I suspect, don't really know enough of the details, you and I. And yet there is also a sense that he's also surrounded himself with the right people, right?
Right.
People that are willing to question him and his philosophy. And that is also a very important leadership lesson, I
Right.
think, here.
I would say also coming back to your comment earlier that he comes from a pretty successful family. I didn't know the details of his family life, but I guess on that background, his achievements seem even more interesting because he could have just sat there and folded his hands and not done much, but instead he has put himself out there very publicly. He has publicly admitted to many of his failures and publicly shown that he can grow and invest in tech stocks, eventually, specifically Apple here. And I think that's actually also something that I admire. That's an interesting trait. Back to surrounding himself with people that are excellent. He is passing on the reins to Greg Abel, who has been with him for a while, now has been a chosen successor. And Warren Buffett has his full confidence in Greg's ability to perform and execute extremely well on investments. I think that some of his shareholders are worried that Greg is stepping in huge shoes and carrying the Warren Buffett persona is an unmanageable and an impossible task because there's only one Warren Buffett. So
Sure.
replicating Warren Buffett directly with all of his attributes is going to be difficult. But what Warren is saying about Greg is that Greg is going to provide good returns to the shareholders because he's seen Greg as a very prudent investment manager.
I think that with Greg, I'm more worried about him being too much like Warren Buffett than him being too little like that in some sense. First of all, he's
Yeah.
peaked in the image of Warren Buffett. I mean, when you see Warren Buffett, Greg Abbott, and Charlie Munger right one next to each other, they're all going for the nice grandpa look and attitude, and they're all calm, soft speaking,
Mhm.
cheerful guys.
But they will be competing very heavily now against private equity firms. So obviously, this level of competition is nothing that existed in 1965 or the 70s or the 80s or even the 90s or early 2000s. I think that now they're in direct competition for their private purchases with private equity firms.
And it's clear that this is a company that over the last 20 years, since 2005, has pretty consistently beaten markets. And yet,
This is based on the investments that they've made years and years ago that still
correct,
continue to grow. What I'm
correct,
saying is going to be very difficult for them to buy a firm and take it private at attractive valuations because there's so
sure.
much competition from private equity firms that will be willing to pay up a bit more and a bit more.
Well, let's not overstate the retirement of Warren Buffett.
He's staying as a chairman.
Yeah,
Yes.
so he's still gonna be around, and he's still gonna ultimately set the overall tone and strategy of the company, I suspect.
So if Abel is able to continue Warren Buffett's financial success, that's going to be more than enough for shareholders.
We can really agree on that one. The proof is in the pudding. Time will tell.
Right.
So, for our listeners that are listening to our podcast in the year 2075, please jump into your time machine, hop over here. Let us know how Berkshire Hathaway did in the post Warren Buffett era, but especially let us know which stocks we should buy to survive the next couple of years.
We can even go 10 years further to match Warren Buffett's 60-year rule. So we can even stretch it to 2085 if we want to.
I was just questioning the cultural relevance of our podcast. I'm like, in 2075,
If you haven't turned off the podcast yet, thank you for joining us. We hope you found this discussion about Warren Buffett as fun as we have. Please send us your comments and continue to listen to us.
please do subscribe. Please do recommend us. And as Kate said, please do keep sending us your questions in finance. Cheers.
Cheers.